What if the recession is already here, confirmed by economists in December 2025, but the stock market just hit all-time highs and NVIDIA is trading at record valuations, and nobody seems worried? Here's what makes this moment terrifying. This exact pattern happened before. October 1929, the stock market crashed. November 1929, it rallied 20%, and experts declared the worst was over. April 1930, the market was still down only 15% from the peak, and economists said recovery had begun. By July 1932, the market had lost 89% from the top, and the depression was in full catastrophic swing. The pattern is always the same. Recession is declared, markets rally or stay elevated, people assume it's a false alarm, then 6–12 months later the real destruction begins, and by then it's too late to prepare. December 2025, we're at that exact moment. The National Bureau of Economic Research confirmed recession started in mid-2025, but the S&P 500 just hit new all-time highs. NVIDIA, Microsoft, Apple tech giants are trading at valuations that assume infinite growth. Everyone sees the disconnect, but most people are interpreting it as the recession won't be that bad, when history says it means the recession hasn't fully hit yet. This is the story of what happens in the 6–12 months after recession is declared, but before markets acknowledge reality, why this delay period is your last window to prepare, and what you should be doing right now in December 2025 that will save you in 2026 when the real destruction unfolds. The lesson from the Great Depression is clear. When recession is confirmed but markets are still euphoric, you have maybe 6 months to prepare before everything changes. Let's start with why markets can hit all-time highs during confirmed recession, because understanding this pattern is critical to not being lulled into complacency. Recessions are declared retroactively by the NBER based on economic data, employment, industrial production, real income, wholesale retail sales. By the time they confirm recession, we're already months into it. But stock markets are forward-looking. They trade on what investors expect 6–12 months out. You get this disconnect. The real economy is already contracting, job losses are beginning, consumer spending is weakening, but markets assume the Fed will cut rates, stimulus will come, and recovery will follow quickly. This happened in 1929–1930. The crash was October 1929, but by April 1930, the market had recovered about half its losses. Investors thought the worst was over. Treasury Secretary Andrew Mellon said the economy had hit bottom. President Hoover declared prosperity was returning. Then, from April 1930 to July 1932, the real destruction happened. The market lost another 80% from that April 1930 level. Unemployment went from 9% to 25%. 4,000 banks failed, and 9 million foreclosures wiped out families. December 2025 looks identical. Recession confirmed, but NVIDIA trading at all-time highs, S&P 500 setting records, and everyone assuming this means the recession will be mild. It doesn't. It means we're in the denial phase before reality hits. Here's the timeline pattern from the Great Depression that's repeating now. October 1929 was the crash, the shock event that announced something was wrong. November 1929 to April 1930 was the denial phase. Markets rallied. Experts said worst was over. People went back to normal. May 1930 to December 1930 was when reality started breaking through. Banks began failing. Unemployment rose sharply. Foreclosures accelerated. 1931–1932 was when the real catastrophe unfolded. Mass bank failures. Unemployment hitting 25%. Homelessness, soup lines, total economic collapse. The worst outcomes came 30 months after the initial crash, not immediately. December 2025, we're in the denial phase. Recession confirmed in mid-2025, but markets still at highs, tech companies still valued like growth will continue forever, most people still employed, still spending, still assuming normalcy. This is the window. This is your last chance to prepare before 2026 brings the reality that markets are currently denying. And just like 1929–1930, the people who prepare during the denial phase survive, while the people who wait for obvious crisis to prepare find it's too late because by then everyone is desperate simultaneously. Here's what history teaches about this preparation window. You have approximately 6–12 months from recession confirmation to serious deterioration. We're in December 2025. Recession confirmed for mid-2025 start. That suggests serious deterioration begins spring-summer 2026. What does deterioration look like? First wave is layoffs, not catastrophic yet, but unemployment rising from 4% to 6%, then 8%. Companies that seemed stable start cutting 10-20% of workforce. White-collar jobs that felt secure disappear. Second wave is credit contraction. Banks get scared, stop lending, call in marginal loans. Small businesses that depend on credit lines suddenly can't make payroll. Third wave is asset price crashes. Commercial real estate first, then residential, then finally stocks crash as earnings collapse and reality forces repricing. Fourth wave is bank failures. Regional banks exposed to bad commercial real estate loans start failing, deposit flight begins, FDIC gets tested. Fifth wave is social breakdown. Unemployment at 15-20%, foreclosures mass scale, homelessness visible, crime rising, political instability. That's the 2026 progression we're looking at. December 2025, we're at stage 0, recession confirmed but most people still okay. You have maybe 6 months before stage 3 hits and preparation becomes much harder. Here's the first action for this preparation window. Pay off debt or build cash reserves, because 2026 will be the year of forced selling and liquidity crisis. If you have mortgage debt, car loans, credit card balances, you face a choice. Pay them down now while you still have income, or risk losing assets when income disappears in 2026. Depression history shows that debt was the primary destroyer of families, not the crash itself, but the inability to service debt when income vanished. Today, with recession confirmed but markets high, many people still have jobs, still have income, still have time to pay down debt or build 6-12 months of expenses in cash. Do it now. In spring 2026, when layoffs accelerate, when banks tighten credit, when liquidity dries up, the people with no debt and cash reserves survive. The people with high debt and no savings lose everything. This isn't fear-mongering, it's pattern recognition. Every recession follows this sequence. Denial phase while people still have income, then sudden liquidity crisis when income vanishes and nobody can borrow. We're in the denial phase now. Use it. Second action for this window. Build multiple income streams immediately, because corporate layoffs in 2026 will be sudden and massive. Right now, December 2025, if you have a corporate job, you probably still have it. Unemployment is still relatively low. But 2026 will bring what always comes in recession: companies cutting 20, 30, 40% of workforce to preserve profits. The people who survive economically aren't the ones with the best single job, they're the ones with multiple income sources, so that losing one doesn't mean losing everything. Start freelance work now. Build consulting relationships. Create side income from skills, rental property, small business, anything. The goal isn't to replace your main income now, it's to have revenue streams operational before you need them desperately in 2026. Depression survivors learned this. The families that had diversified income, main job plus garden plus odd jobs plus rental income, survived when the main job vanished. The families dependent entirely on one corporate job were destroyed when that job disappeared. December 2025 gives you maybe 6 months to build this diversification before the layoff wave hits. Third action, convert paper wealth to hard assets while markets are still high, because 2026 will bring the repricing that wipes out paper wealth. Right now, S&P 500 at all-time highs means if you sell stocks, you're selling at peak valuations. NVIDIA at record prices means you can convert those shares to cash or hard assets at maximum value. The Depression taught this lesson brutally. People who held stocks from 1929 peak to 1932 bottom lost 89%. People who sold in 1929-1930 when markets rallied and converted to physical assets, land, gold, tools, paid off real estate, preserved wealth. We're at that moment now. Markets at all-time highs during confirmed recession is not a sign that recession will be mild. It's a gift, a last chance to sell paper wealth at inflated prices before reality reprices everything. Convert some portfolio to physical assets, pay off mortgage with stock sales, buy gold and silver as insurance, acquire tools and equipment for income-generating skills, build cash reserves. This sounds like crazy talk in December 2025 when NVIDIA just hit new highs. It will sound like genius in December 2026 when NVIDIA is down 60% and people are desperately trying to sell at any price. Fourth action, build community networks and food security now, before 2026 makes everyone desperate simultaneously. One pattern from depression survival data: the families with strong community ties, relationships with local farmers, mutual aid networks, survived far better than isolated families. But you can't build those networks during crisis when everyone is scared and hoarding. You build them now during the denial phase when people are still relatively secure and willing to cooperate. Start gardening, even small scale. Connect with local food producers. Join or create mutual aid groups. Build relationships with neighbors. Learn food preservation, canning, fermentation, storage. The goal isn't to become self-sufficient homesteaders in 6 months. It's to have basic food security infrastructure operational before 2026 brings supply chain disruptions and price spikes. Depression survivors who had gardens, who knew farmers, who had community networks, ate reasonably well even when money was scarce. Urban isolated families dependent entirely on grocery stores and cash incomes starved when both failed. Fifth action, acquire practical skills in the next 6 months, because 2026 recession will reward skills over credentials. The corporate jobs disappearing in 2026 will be administrative, managerial, anything that exists because the economy can afford inefficiency. The jobs that survive will be practical necessities: repair, maintenance, food production, essential services. December 2025 gives you time to learn skills that will generate income in 2026 when your corporate job vanishes. Electrical work, plumbing, HVAC, carpentry, small engine repair, appliance repair, welding, any trade skill that creates immediate tangible value. Or food production skills, gardening, animal husbandry, food preservation. Or essential services, childcare, elder care, cleaning, basic maintenance. These aren't prestigious, but depression data showed unemployment in skilled trades was 15–20%, while white-collar unemployment hit 35–40%. The pattern is clear. Learn to fix things, grow things, make things. Have skills that people need regardless of economic conditions. Here's the critical insight that depression survivors learned and we're about to relearn. The time to prepare is when things still seem okay, not when crisis is obvious. December 2025, recession is confirmed, but most people are still employed, still spending, still assuming normalcy will continue. This is the preparation window. In 6 months, spring-summer 2026, when layoffs accelerate, when credit freezes, when asset prices crash, preparation becomes much harder because everyone is trying to do the same things simultaneously: sell stocks, raise cash, find new income, cut expenses. The people who prepared during denial phase survive. The people who wait for obvious crisis find it's too late. The Depression taught this lesson. Between October 1929 crash and December 1930, when things got really bad, there was a 14-month window where smart people paid off debt, built cash reserves, acquired hard assets, learned skills, built networks. Those people survived the next decade. The people who assumed the 1930 rally meant everything was fine got wiped out in 1931–1932 when reality hit. We're in that window now. December 2025. Recession confirmed. Markets in denial. 6 months to prepare before 2026 brings reality. This is the empire economy, where we decode the patterns that repeat because the mathematics of debt, recession, and collapse don't change. Use this window. You won't get another one.